How's it? Sean here from Mel's YouTube book site YouTube channel. Okay, cool. And a Merry Christmas and a Happy New Year to you all. And I hope that your New Year's resolutions come to fruition for you. And I hope you do and you get all your New Year's resolutions. I hope I get mine. I hope I do mine. Okay. All right. So this is the start of lesson 6. All right. Now you got to, I'm going to repeat this again. I know that I do this in all the. I must sound like a broken record. If you haven't watched lesson 5, please go watch it. In fact, if you haven't watched any of the lessons before this, go watch them. Accountancy is a very intricate science, which that means is very attention to detail. Figures a procedural activity, which means if you get something wrong somewhere in the previous exercises or lessons or books, it all turns out wrong. It all goes wrong. Okay, so you've got to make sure that because each lesson leads into each other lesson. Very important. Basically, in lesson 5, we closed off March's books and we did a. Let me just get to the bottom here. We did a trial balance. There it is. That was lesson 5. We closed off March's balances, counts, and then we did a trial balance for March. So please go watch that lesson. It's important because in this lesson we're gonna bring all those balances forward into the month of April. I'm going to show you how we do that. All right, cool. Let's get started. Please watch my mouse as it tells the whole story. Okay, supplies invoices on the credit side, including that. Now, factory A. We went and bought some new products, some new saddles and pumps from factory A for the month of April. And they sent us an invoice. This is the invoice to us for the new stuff we bought from factory A. Bought 10 saddles, 15 pumps. We added up the totals of the amounts that they costed us with the VAT, including VAT, came to $402.50 worth of stock that we went and bought from factory A for the month of April. Factory B, the March outstanding balance not paid brought forward was $862.50. So this is the outstanding amount that we still owe Factory B that we haven't paid for yet. And then we went and bought new stock from Factory B. We bought 10 saddles, 10 pumps, and 15 bells. We added up all those totals, including the VAT over there, as you notice. It came to $431.25. We added up all these totals over here. So the total supplies accounts equals $1,696.25. All right, got it. Now, Mel's Wholesale Bicycle Store. This is a new month in April, and all the balances from the previous month in March must be brought forward. Okay, so April closed stock balance brought forward from March, excluding VAT. So in total, we bought 20 saddles in March, we bought 50 pumps, and we bought 15 bells. We added up those totals. It came to $975. That's brought forward, the closed balance from March. The new stock bought in April was 20 saddles, 25 pumps, and 15 bells. We added up the totals. It came to $725. We add the $725 to the $975 gives us a total of $1,700. The new and the old stock total for April. And then we had some customers that came and bought from us again in April. This is April stock sold to customers plus profit excluding VAT. We sold 30 saddles, 31 pumps, and 29 bells. The total amount, we added all that up, the total amount came to $2,105. So $2,105 new stock sold to customers in April. All right, got it. Okay, on the inventory account for this stock, we're going to make the entry for that stock. In March, the balance brought forward on the debit side, we brought forward 20 saddles at $20. In April, we bought some new stock. We bought 20 saddles at $20 as well, and we've put those totals in there. March's brought forward stock of 50 pumps at $10 was $500, and then April's new pumps that we bought. The new stock that we bought in April of pumps was 25 pumps, and that was at $10. March's stock brought forward of bells is 15 bells at $5. And then we went and bought some more bells. Okay, we bought 15 bells for the month of April at also $5. The total amount was $1,700. So the total stock bought at cost price was $1,700. Okay, so also on the credit side, the customers, we're going to credit the customer stock brought forward, excluding that. So all this on the credit side is going to come through all the stuff that we sold, all the customers that bought stock will be put it. We're gonna put those amounts that they bought on the credit side. And that's coming later. You'll see that in the inventory count later. Okay, cool. All right, so they're the customer's invoices, including that on the debit side. Okay, so these are the invoices that we issued to our customers for the stock that they bought from us. So the month of April, Collins came and bought a whole lot of stuff. He bought saddles, pumps, and bells. Watch my mouse. And then we added all that up, and that was including the VAT. We got to that amount over there. That's $718.75. Mr. Church came and bought some more stock from us as well. He bought some saddles, pumps, and bells. We added all that up. We included the VAT in that. We issued it to the invoice with VAT to him. So in total, that was $920. Mr. Welsh's outstanding balance from March was brought forward. He hasn't paid us yet, okay, for the stock that he bought. So that amount was $805. But he, in this month, also, in the month of April, he also came and bought some more stock from us. He bought some saddles, some pumps, and he bought some bells. We added all those up and we got to that total. And then we included the VAT at 15%. We issued out a credit note. The VAT on that was $2.25, and one bell, and that was at $15. So the total was $17.25, which is taken away from these totals over here. So the grand total on this side for Mr. Welsh is $760. Petty cash sale of one pump, okay, which was sold from out of petty cash, was $20. The VAT on that was $3. So that's $23 in total. So we add up all these totals, this whole lot. Watch my mouse as I'm going down all of this, and we get to $3,226.75. That's the total customers' invoices, $3,226.75. Okay, now, the purchaser's control account, as shown in a T account, is always on the debit side of the general ledger. So we're going to open up a purchaser's control account for that stock. Okay, so just this is an example, as I've mentioned in earlier lessons, that everything you see now in the purchaser's control account, as it's laid out right now, okay, for all the stuff we sold to Mr. Collins, Mr. Church, the stock, this always goes on the debit side and in this same format in the general ledger. All right, so the purchaser's control account excluding VAT. Okay, Mr. Collins' stuff, the invoice, the stuff that he bought from us, the 10 saddles, the 10 pumps, and the 5 bells. We add up all those totals and we get to $325 in dollars. Mr. Church's invoices, the stuff he bought. He bought $10, 10 saddles, 15 pumps, and 10 bells. We add up all of that. It's $400 in total. Mr. Welsh's saddles that he bought, his pumps he bought, his bells he bought. We added up all that. The credit note for the bell that he returned was $5. We included that in there. That we took that amount away from the total amounts that he bought from us for that invoice. It comes to $320. Okay. The petty cash for the one pump that he came and bought from us was $10. We added that up. So the total amount is all these amounts. Let me just have a look. All these amounts added up, it comes to $1,055. Okay. So you put the total, you put to the put customers bought goods at cost price $1,055, excluding VAT, to the inventory control account on the credit side. These are the goods sold and taken out of the inventory account. Okay, saddles sold at cost price excluding VAT, 30. At $20, it comes to $600. Pumps sold at cost price excluding VAT is 31 pumps, and bells sold at cost price excluding VAT, 29 bells. You add up all those totals, it comes to $1,055. The total purchases is $1,055. Put total purchases excluding VAT to the debit side in the trial balance. All right, so now we're going to fill out the inventory account for the stock that was taken out, the stock that was bought from us. Remember, we had the debit side where we bought from our suppliers, and we also had the March balance come forward. Now we're going to fill out the credit side of the inventory control account. So we credit the customer stock bought. We credit the customer stock bought excluding VAT. All right, so hope I made that clear. So 30 saddles were bought at $20 each. That leaves us with that $600. 30 pumps were bought at $10 each. That's $300. One pump petty cash was bought at $10. That's $10. And 30 bells at $5. It's $150. We issued out a credit note to Mr. Welsh for one bell of $5. Okay, so we add that total up, it comes to $1,055. This is the closing stock that we have left, okay, in inventory. We have 10 saddles left, we have 44 pumps left, and we have one bell left. Okay, the total stock bought at cost price. Stock bought was $1,700. Stock sold was minus the $1,055. The inventory total was $645. We put to the inventory in the trial balance on the debit side at month end. The closing stock of $645. We carry forward inventory pumps into the 1st of May to put on the debit side. So we're carrying this in a nutshell, we're carrying this forward to put in the debit side of the inventory account because it'll be stock we're bringing forward into the month of May, on the 1st of May. Okay, so now this is the customer's invoices including VAT. Okay, this is the same invoice. These invoices always include the profit as well. Just remember that. This invoice here, we did earlier here. I did earlier with you. I had the customer's invoices including VAT. And that invoice was we did it over there because we wanted to do the purchaser's control account. Now the reason I've now shown it again is because we are now going to do the sales control account. So that's the exact same invoice that we just did earlier now to all those customers of ours. All right, now the sales control account, as shown as a T account, is always on the credit side in the general ledger. So this again, once again, is an example of how where the sales control account goes in the general ledger, always goes in on the credit side, and it looks exactly like this, exactly how it's shown out on the credit side in the general ledger. All right, so let's do the sales control account for April. The sales control account, excluding VAT, and this account always also includes profit. All the profit is included in this account. Okay, so Mr. Collins bought 10 saddles from us, he bought 10 pumps from us, and he bought 5 bells from us. We added up the total of that, so the total amount was $625. Okay, that's what we sold to Mr. Collins. Mr. Church bought 10 saddles, he bought 15 pumps, and he bought 15 bells. Added up all those totals, it came to $800 for Mr. Church. Mr. Welsh, he bought 10 saddles, he bought 5 pumps, and he bought 15 bells. And then we also issued out a credit note to Mr. Welsh for $15. This credit note is taken away from the totals over here that we got for his saddles, his pumps, and his bells. It's taken away from that. So it comes to a balance of $660, okay, for Mr. Welsh. We also sold Mr. Welsh a pump out of petty cash. So that was at $20. So we put that $20 over here as well. Okay, so we add up all these totals, all of this, and we get to $2,105. Okay, the total $205, you put customers bought goods excluding VAT to the sales control account on the credit side of the trial balance. All right, so we're done. That was it. Yeah, we're done. Lesson 6. Tough lesson, eh? A lot to say in this lesson. Yeah, and I'm glad you actually watched. I hope you understood this. I tried the best to explain it. So, if you have any questions or you want comments, just send us a message. All right, so please like this video if you liked it. Please share it with everybody you know. And don't forget, please subscribe to our channel. It's important. So we'll give you messages, whenever there's a new video coming up. So please subscribe to the channel and ask questions and leave comments. We're more than willing to help you. And have a happy new year until the next lesson. Sean here. Good day on you.